advise someone to invest in gold because this is the most safe haven commodity ever. You can see it has hit high at 37.50, and the price of the gold still has a tendency of going up, up, and up. So currently, the people who've been buying the gold pair, gold USD pair, they have actually been profits, and this has been so advantageous to them. So what do we expect from now onwards? You can see the market has hit the all-time high, and now what we expect is that the market now retrace to either the fair value gaps or the demand zones that it has left behind. So what are these things that I'm talking about? When you look at the 4 hours time frame, let me zoom in. 4 hours time frame, when I keep marking all the time, all the highs and the lows, you can see here, this is 4 hours resistance zone. Let me mark another one, and these actually, this is this is a strong support area. And when you see clearly that these gaps being left behind with the markets keep on rallying upwards, let me remove this one here. So that you can see clearly what I'm talking about. I want to remove this, yeah. So there are these gaps that the market keep on leaving behind, and they are very, very significant. When you keep on spotting them, you can see, let me show you. Okay, yeah, when you see there's this huge bullish candlestick that was formed, crossing convincingly our past resistance zone. So remember, not only passing, but it has passed convincingly, and leaving some few other candlesticks closing above it. So this is very, very significant. Also, you can see there's this gap that has been left behind. You can see there's this previous candlestick before this huge bullish candlestick, and there was this gap left when the succeeding candlestick after that bullish candlestick formed. There's that gap left right there. So there's a possibility the market would come to that point, give us confirmation, and then rally upwards again. And also, there's another fair value gap down here. Let me show you clearly. Yeah, there is the fair value gap right here. You can see there's this bearish candlestick formed before the bullish candlestick, and the succeeding candlestick left that gap that wasn't filled. And also, this is a very, very significant area of confluence for us to look at. You can see this zone here, a fair value gap, and another zone. Sorry about that. I want to drag it to that fair value gap so that you can mark the area of the fair value area of confluence that we are looking forward for the market to retrace to. Yeah, you can also see there's that two fair value gaps left behind in 4 hours time frame, and they're very, very significant. So there's a probability the market would come to these zones, either of the zones. So now remember, we are trading area of confluences, and area of confluences is where we can have either two or more points giving us signals that the market would be ready to be traded out. So either we look at now what then, after giving us those area of those fair value gaps, what then should we look for us to enter the market bullish. You can see there's this area of resistance that was crossed convincingly upwards with these candlesticks right here, leaving this gap. So there's a probability the market would come down either to this fair value gap or coming down to this fair value gap at the lowest point right there. Another thing we have to look at now, let's take a look at the Fibonacci retracement zones. Where is the Fibonacci retracement tool? Yes. Good. Fibonacci retracement zone. So we are starting from this point to that high point. Our zero will be at that high point right there. Let me zoom it. Good. So another thing is, now when we look at the Fibonacci retracement zone areas, we are now looking forward to areas between the 0.5 or 0.618. So if the market retraces to either of the zones, those two zones that I've mentioned, that would give us a good area of confluence to trade the market. So if the market retraces to either of these zones at 0.5, 0.5 or 0.618, then this will be a good area of confluence for us to enter along positions. First, remember, you have to wait for the market to give you a confirmation that is ready to go upwards. Don't just put your buy limits at those points, because at times the market could come down, and due to some factors we don't know, the market could go on a bearish trend. So if the market comes to either of the zones, so remember, you have two fair value gaps, and which is the best fair value gap to trade in? You can see there's this fair value gap above 0.5, and there's fair value gap at 0.618. So if the market comes to this lower fair value gap, it will have a high probability of you getting a profit from the market, because this the lower fair value gap could give us a good profit if the market retraces to it. So we are looking forward for the market to retrace to this lower fair value gap. Another area of confluence that we're going to look at is the demand zone. Let's shift to 1 day chart. In 1 day chart, if I zoom like this, you can see. So what we consider demand zone, a demand zone is when you look at, put your focus at the last bearish candlestick before those upper huge bullish push, you can see there's this red bearish candlestick that was formed before the market. There's this red bearish candlestick that were formed before the market passed our previous high or previous resistance zone. So definitely this is our best area of confluence. Remember, earlier on I told you that this lower fair value gap will be a best position for us to enter long positions, but also you have to consider, so remember, this area is our demand area. So we are waiting for the market to retrace to this demand area, a demand zone. Yeah, so this is our best area of confluence as of now. So we're gonna forget about these other upper fair value gap, so that we put all our focus on this lower fair value gap. So remember, our best area of confluence is this area right here, down here. This is our demand zone. This is where we have the fair value gap in 4 hours chart. As well, you can see those Fibonacci zones areas 0.618 has touched. So as the probability if the market comes to this zone gives a confirmation that it's going to go upwards, we're gonna enter long. We're gonna put our stop loss right below that candlestick. That's gonna give us that confirmation. So let me just show you how you're gonna enter the market right there. is this icon that I'm looking at? I'm looking for, yeah, long position. Good. So in case the market comes to this demand area, so we're gonna wait for the market to give us confirmation. Some of the confirmation we're gonna look at are the doji candlesticks, bullish engulfing candlesticks. We have tweezer tops. Yeah, we're gonna look for those candlesticks that are giving us confirmation that the market is ready to go up. So remember also, we have to wait and be patient in the market. So if in case it gives us those candlesticks, now we're gonna enter long position, and this is how we're gonna put our stop loss. Let's assume it's got to that point, and now we're gonna put our take profit at that point. So remember, you put your stop loss right below the candlestick that gave you a confirmation. So for example, here we assume the market gave us that candlestick at that at this point. Yeah, we're gonna assume the market gave us that candlestick at that point, and now we're gonna enter a long position. It's always advised or always good to enter whenever the market, if it retraces to that point, we're gonna have to wait for it to give us confirmation here, either 15 minutes chart. At the 15 minutes chart, where now we're gonna have that good entry. Yeah, you can see in 15 minutes that there's just that steep bullish slope, the steep bullish trend. And in a steep bullish trend, actually anything can happen. It can either be broken downwards easily. So for this example here, you can see there's this trend line. When you put a trend line below easily recognizable support areas, it is very, very steep in 15 minutes time frame. So for the scalpers, it would be good if the market passes this trend line going downwards, then it's gonna give us that bearish momentum. So we are bearish momentum to this fair value gap right down here. So we have to be patient for the market to come to this point. And also, if the market passes this upper resistance zone in 15 minutes time frame, we're gonna have to wait. If it passes it convincingly, we're gonna wait for the market to retrace to this point, give us confirmation, or either retrace to the trend line, give us confirmation, then we enter another long position. And for swing traders, we're now waiting for our market to get to this zone right here. That would be a very, very good place for us to enter long position, as the market would retrace, or rather do the price correction. Probability of it doing that is very, very high. If the market passes this trend line and it crosses, or rather passes or closes below our previous support area, we're gonna wait for the market to either hit the previous support areas until it gets to this point. When it gets to this point, we're gonna wait for it to give us confirmation, and then we now go enter the long position. So thank you. My name is Brian Yakoka. In case you're new here, press for me the subscription button and knock that notification bell to get notified every time I'll be dropping a daily signals. Thank you.